Okay, some inventory cost flow assumptions is next. We kind of showed the same exact model last chapter, right? So we have a beginning inventory and we bought more inventory throughout the year. Remember, beginning inventory is just left over from the prior time period. Whatever we didn't sell last period becomes my beginning inventory this period. Also, buy new stuff. And that would be our inventory for sale, merchandise available for sale. Now, we either sell it or we don't sell it, right? If we sell it, we can expense it through cost of goods sold. If we don't, it becomes our ending inventory. And this little model right here is basically what we're going to be talking about with these cost flow assumptions coming up. There are 4 of them because we're kind of looking at it as if we're doing the periodic system, not perpetual, where we're not going to mark down every single sale every time it happens. I mean, that would be something you really can't do for like the dollar store or CVS, Walmart, these bigger item stores. So a lot of times what happens is that we'll have this beginning inventory, a bunch of product is all on the shelves, and then we'll buy more product, and where does it go? Also on the shelves. It all gets mixed together. So customers then come in to buy it. Which one did they buy? Did they buy our beginning inventory? Did they buy some of the new stuff? If we made several purchases throughout the year, which one did they buy? Because sometimes, actually most of the time, inventory doesn't cost the same. We might buy a certain inventory now that costs $1 per product, and then maybe $1.20 by the end of the year, depending on the cycles and the season. So this really is what the chapter's on. If a customer buys a product, which one did they buy? Which shipment does it come from? So we're going to have these different cost flow assumptions that will help us determine which ones they buy. Okay, so here's the 4 different costing methods. The first one is specific identification. We are going to go over this one, but this is not going to be the main focus because it is very rarely used. This is when we're going to account for it, each individual item separately. Usually we don't do this one. Now, FIFO, this one here is pretty popular. It stands for first in, first out, and I'm going to be talking more about this. We're going to go over each one of these individually. So it just means that the first thing we bought, we're going to assume it's the first thing we're selling. Is that true? I don't know. We're not watching every customer buy the goods. We don't see, okay, which one did you just buy off the shelf? Which exact item was it? We're not watching, so we're just going to assume. That's why this is called inventory cost flow assumptions. So we're going to assume one of these methods and just stick with it. Okay, so we're going to assume that everything that we're selling comes from the first orders, not from the more recent orders. Okay, we have LIFO, right? Last in, first out. So this is also a very popular one as well. I'd say FIFO and LIFO are the 2 most popular ones. It means that the last thing I bought is what I'm selling first. So if I bought something at the beginning of the year, I'm going to assume I still have that. And if I bought stuff maybe at the end of the year, I'm going to assume that's the stuff I sold first. Okay, and the last one is called average cost. All right, so the average cost is just in its name. We're going to just do an average of everything we bought throughout the year, and when we sell it, we're just going to use an average price for it. This one here, not as popular as LIFO and FIFO, but it is one that is used probably more than a specific identification. Okay, so we're going to be talking about these 4 different cost flow assumptions next. Okay, so the first one is specific identification. Remember, this is the rare one. This is when every single unit is counted for separately. So usually it's the high value or the really large items. Not all stores can be using this method. So some examples were boats, jewelry, cars. So very expensive items. You're not selling so many every moment of the day. It takes a little bit longer for these to be sold. Okay, so we're going to identify the cost of goods sold for that particular item on every single sale. Okay, so you can follow along with the classwork. We're doing problem number 1, part A, and I'll have to probably close this video soon so that we can kind of see everything. But I can just start it right now. Trey Monson starts a merchandising business on December 1st and it enters into following 3 inventory purchases. So if you look, they made a purchase on December 7th, 10 units, and what they spent was $6 each on it. And then they did another purchase on the 14th of December. And we're doing this just for 1 month, by the way, for 1 month of December. We're not looking at a whole year. But they bought 20 units at $12 each. Then they sold some. They sold 15 units. So they sold it for 20 each. In this case, we don't care about the sale. All we're really doing is seeing what the cost was to us. The units that we sold, what did it cost us? What we still have on our books, the balance, what that cost us. So we really don't care about the actual sale at this point. We will be recording the sale for what it cost us, but we don't really care about our markup and our gross profit in this chapter. Okay, we did another purchase here, our last one, 15 units at $14 each. Okay, so of the units sold, 8 are from the December 7th purchase. And since we're doing specific identification, we do need to know exactly which purchase the items we're selling comes from. Okay, and the other ones we're not going to know, and we're going to just use the assumption to figure it out. All right, so 8 were from December 7th, and 7 come from the December 14th purchase. We didn't sell any that came from the 21st because we sold everything up, those units before that. Okay, so give me one moment. I'm just going to close this out so that I can write on the screen. Okay, so this first column is the date. Next one here is goods purchased. So all of our purchases are going to go into that column. Cost of goods sold. So these are our sales. I'm just going to kind of write that up. And excuse the handwriting. I have to use the trackpad for this, so it's a little messy. I don't have a pen for the screen. Okay, and then the inventory balance we're going to have to update every single time. So every time we make a purchase, we want to update what our inventory is. Every time we make a sale, we'll also have to update what it is. So basically, at the end, our goal is to figure out what our cost of goods sold is, what we sold, how much it cost us, and to see what our balance is left, because that will be our beginning balance for the next time period. So we're just going to go in order here. The first thing we did was we made a purchase on December 7th. So in the date, you put 12/7 in. Okay. And we're going to use the first column here because it's what we purchased. So we purchased 10 units. So number of units, 10. How much did it cost? Put the $sign in. It costs $6 each. So what's my total? My total would be 10 times 6 would equal $60. And that's what we purchased on that date. So what's my inventory balance? What do I have? Well, that's all I got. So I have the 10 units at $6, which cost me $60. That's what I have right now. We're done with the first one. See, this is actually pretty easy to do. All right, so I'm going to try to draw a line here so we can kind of keep different dates separated. Like I said, this is really hard to do with my trackpad. All right, so the next one, we purchased more units. We purchased on December 14th, so 12/14. We purchased 20 units at a cost of $12 each. I'm not going to do the $sign anymore just because it's kind of hard to do this. So now we do $20 times 12 equals $240 worth of stuff that we paid for. Remember, we do want to sell it for more money, but this is what we paid. So what's my balance now? Now it's a new date. I want to know what my balance is on 12/14, which includes these 10 units plus these 20. So whenever you do the inventory balance, you do have to include your prior purchase. So on December 14th, what did I have? I had 10 units, $6 each, which cost me $60 total. And I had the new units I just purchased, which was 20 units that cost me $12 for a total of $240. Okay, we want to total this up. How many units altogether do I have? 10 plus 20, I have 30. You don't have to worry about the middle column. How much did it cost me? It cost me $300 total. because that's 60 plus the 240. So you're basically adding all this up right here. So as of 12/14, what do I have? I have this right here. So let's draw another line because now we're going to do another date in here. Okay. So now it's a little different. Now we're coming up to the sale. We sold on December 15th, 15 units. So we put the date in 12/15. Hard to read. We're going to use the middle column this time because it was a sale. So we want to look at our sales here. So we sold 15 units at 20, but because we're doing specific identification, we have to use the information from up here. We know 8 of them come from the December 7th purchase, and 7 come from the December 14th purchase. So we want to put them in here specifically. We have 8 units we sold and 7. Okay, the 8 units come from December 7th, which cost me $6 each. And the 7 units come from the 14th, which cost me $12 each. Okay, and you want to do the math here as well. 8 times 6 is 48. 48, sorry, it's messy. And then 7 times 12, we have 84. Okay, so that's what we sold. So the last column is our balance. What do we have left? So see how we had 10 units here from the December 7th? We don't have 10 anymore. We just sold 8. So you don't have to like write this in or anything. I'm just to show you. We sold 8 of these units, so we only have 2 left. That cost me $6 for a total of 12. Okay. These 20 units I had from the December 14th purchase, I sold 7. So how many do I have left? 13. And remember, they cost me $12 each. So we want to do 13 times 12, using my calculator, 156. So what's the total here? How many units do I have? I have 15 left, right? 2 plus 13. And then how much did it cost? 12 plus 156 gives me 168. Okay, and then we're done with that date. So I would say updating the balance here in this last column is probably one of the more difficult things because you do have to analyze it a little bit. Okay, last one's pretty easy. It was just a purchase on the 21st. So 12/21. Purchase, remember we're going to use this first column here. We purchased 15 units at $14 each. So it cost me altogether 15 times 14 is 210. Okay, so what's my balance? Well, I had this plus my new purchase. So the first part's just to copy down what we had already. 2, 13, 6, 12. So I'm just copying down my balance from before because we still have that. We didn't, that's what we got. And we're just adding to it, 156. So that's what I had before, plus my new purchase of 15 units at $14 each, 210. So I'm just copying down my new purchase. So what do I have left? 2 plus 13 is 15, plus 15 more. I have 30 units total. And we really don't care too much about that column, like putting this 30 in, but I really care about more is the cost than anything, this last one here. How much does my goods cost me? 12 plus 156 plus 210. 378. 378. Okay, so we do have to total this right here, this whole column, the whole column. Remember this -8 and -7, I just put in to help you, but that's not part of the column. So it's 48 and 84. That's what we sold, 48 plus 84. So my cost of goods sold, to me, my cost is $132. Okay. The inventory I still have is worth 378 to me. And that's our two goals. Doing this whole chart is to figure out these two numbers. So when I put in my sale, I can see, how much my profit is. I did sell for 20. I know what's going to, what it cost me. So, but this is it. This is all we have to do. And we're going to do it for these three other methods. This is method number 1. Next, we'll learn about FIFO, first in, first out. So we're assuming that the oldest goods we bought, the thing that came the longest time ago, that's what we sold. And the stuff that we recently bought, that would be part of our ending inventory. So here's just like a visual representation of it. We bought these boxes. These are the first ones we bought. These are the last ones. And we're going to assume that the ones we sold came from the first order, and what we still have left in our ending inventory comes from our last order. Okay, so we're going to do the practice problem with it. And once again, you can follow along on the Classwork 6 sheet that's available to you. And then the answers are also posted. All right, so it's the same exact problem. We have the same company, the same purchases, the same sales, everything's the same, except for instead of using the specific identification method, we're using FIFO. So we're going to assume that the first things we bought, like from the 7th or 14th, that's what we sold first. And the stuff at the end, like the 21st, maybe even up to the 14th, those are the things that we still end up having in our inventory. Okay, so let me open up the pen again. So it starts off pretty much the same thing. The first few lines for all these methods are going to be the same. So we have the purchase on 12/7. Of 10 units for $6 each for a cost of $60. Really, the only time this starts to change is when we get to the sale, because we'll pick different items that would be sold. But just for purchases, it's all pretty much the same thing. So I'm just going to copy it over, because remember, what do we have? Well, we have the purchase. And then, a line underneath just to keep this separate. So done. So now on the 14th, we made another purchase. So this should still look exactly the same as part A. We purchased 20 units at $12 for a total of $240. 240. So what do we have? We have the combination of the two. So on the 14th, we have 10 units at $6 for $60. And we have the 20 units at $12 for $240. 240. So what's our total? 30 units. Like I said, we don't really need to put that part in, but we will later. So this is good to start doing that now. Cost $300. So these first three lines are exactly the same as part A. It's going to start changing now when we get to the actual sale. So the sale is where it becomes a little bit different. We have, it was on the 15th. Okay, so you really do have to analyze this. We sold 15 units. Which 15? Because we're doing the FIFO method, we're going to assume that the first thing we bought is what we sold. So we sold 15 units. Where do those 15 come from? We start at the top and you work your way down until you have all 15 accounted for. So we bought 10 units in our first order, so we're going to assume all 10 of these are gone. And then we work our way down to the next order, so we have to come up with 15, and that was only 10. So we're going to assume 5 from the second order were sold. So we're basically, minus 10. We're taking away all 10 from the first order, and then taking away 5 from the second order. That's our 15. Sorry, minus 5. So you start at the top and you work your way down until you have all of them counted for. And it's 5 units, and then they would be at 12 each. So 5 times 12 is $60. Okay, so what do we have left? These 10 units here are all gone. That's gone. So we don't have that. And out of these 20 units, we just sold 5 from it. See, the 5 here are gone. So we only have 15 units left. They come from this, so they come from the $12 each price. So we just get out the calculator and we do 15 times 12. I got 180. So that's what I have. All right, does that make sense? That's the tricky part of this. Okay, that's all done. Now the purchase is pretty easy, $12.21. We purchased 15 units at $14 each, so 15 times 14. Once again, that should be 200, 210. 210. Okay. So what's my balance? Well, I have this as my balance, what I had before, plus a new order. So I just put both of them in. I had 15 units at 12 from up top, just carrying it down. And then I was going to add my new purchase to it. 15 units at $14 each for a total of $210. That's it. We just total it up now. My total cost of goods sold, so I'm going to add up this column here. It's just these two items. 60 plus 60 is 120. And I've got, 30 units left right now at a total of $390 when you add these two up. So my deliverables were this number and this number. That's what we're trying to find. So we would know what to use in our journal entry. The cost of goods sold, total price was $120 to us. That was our cost. And what I have left is $390. And like I said, this will carry over to the next month. Okay, last in, first out, another very popular method. This is our third one here. It's the opposite of FIFO. So FIFO was first in, first out. We're saying the last in is what it was going out first. So basically, we're going to assume that my most recent purchase is what I sold first. And that what I purchased at the beginning of the time period is what I still have. So here's the visual representation of it. If I bought these first and these last, I'm going to do it opposite. I'm assuming that the stuff I bought first is what I still have, and what I bought last is what I sold. So we're just kind of flip-flopping it. So pretty much most of this is going to be exactly the same. It's when we get to the sale part that's going to change. So the first part's still the same. Same problem. None of these numbers have changed. So we still have this purchase on December 7th. This should be very repetitive by now. 12.7. We bought 10 units at $6 each for a total of 60. I'm just going to do this fast. I know it's sloppy. I'm sorry. You can look at the classwork for a neater version of this. Okay. All right. Then on the 14th, we purchased 20 units at 12. For a total of 240. And what do I have? I have what I purchased before. I didn't sell anything yet. And my new purchase. So first 3 lines are exactly the same as part A and part B. So it makes it very easy to do. 240. So my total's actually the first 4 lines. 30. Got $300 is the cost. Okay. So like I said, it's where the purchase comes in that gets a little bit trickier. So we did the purchase on December 15th. 12.15. We're going to be using the middle columns this time, right? Because we did a purchase. Or a sale, sorry. Doing a sale. So we sold 15 units. You don't just write 15 in here, right? We have to pick which 15 from our balance that we sold. Because we're doing LIFO, last in, first out, we're going to say what we're selling, what's going out, is coming from the end, the last thing I bought. So before we start the top and worked our way down, now we'll start the bottom and work our way up. So if I sold 15 units, Look, they can all come right from this order right here. I can do, minus 15 right from here because I had 20. Last time when I start at the top, it was 15 units. I only had 10, so I had to take some from here. This time we don't have to go up or anything. We can just use the same order. So if I sold 15 units starting at the bottom, I can do it from this last order. 15 units times $12. Let me get my calculator. 15 times 12 gives 180. Okay. What do I have left? Well, I still have these 10 units. I didn't sell them. So I still have the 10 units at 60. But I don't have the 20 units at 12 because I sold 15 of them. I only have 5 left. So 5 times 12 is 60 for a total of, I've got 15 units here. That cost me 120. And we're done with that part. Like I said, that's the hard part. Okay. Last part's the sale. A purchase on December 21st. We're just going to add that in. It was 15 units, $14 each. I believe that was $210 is the total. Okay, so now what do I have? Well, I have this right here, the 10 and 5 units plus the 15. So you just kind of have to write that all in. So lots of repetition here. So I'm just copying this down from my balance up top. Okay, so this right here comes from this right here, plus the new order. The new purchase I made, 15, 14, 210. So what's my total? I have 30 units. And I'm going to add this up. 60 plus 60 plus 210 is 330. So that's one deliverable. The stuff I still have is worth 330. And what I sold, the cost to me is 180. Obviously, I sold it for more money because I want to make a profit, but it cost me 180. Okay. So next we'll be going over the weighted average method. So the weighted average method works a little differently. When a unit's sold, we're going to do the average cost of everything we bought so far and just assign that average cost to those items we're selling. So the formula is we take the cost of goods sold available for sale divided by the units on hand. Basically, it's the total price, the total cost, divided by the total number of units we have. So it's really the dollar amount of everything that we bought so far divided by the number of units. This being the number sign. So I'll just kind of carry that over here. We're going to be doing the dollars divided by the number of units. Okay, and we're going to be calculating this whenever we do a purchase. Okay, so like I said, it's the same problem. So you're probably getting really bored of it, but we have a purchase on December 7th. Same thing. So the first few lines are going to be exactly the same as before. 10 units at $6 for a total of 60. And that's what we have. Since it's only one thing, we don't have to do the average right now because it would just be the same thing. That's it. Okay. So that is number one. Second one is the purchase on the 14th. Part of this is going to be the same, and then we're going to kind of update the average cost for it. So we bought 20 units at $12 for a total of $240. Okay. What do we have? Well, we have the 10. The 10 at 6 and 60 from right above. And we have the new order of $20, 20 units, sorry, at $12 for a total of $240. So this is where it gets a little different. See, I have the line here that says average cost. So it's the average of this. So we got to find the dollar amount. So the dollar's right here. 60 plus 240 equals 300. And we divide it by the number of units. We had 10 and 20, so we have 30 units. So what we're going to be doing here is doing 300, it's my dollar amount, divided by the 30 units, which gives us $10 each. So that's my average cost. So it's basically this middle box right here that we care about. It's that $10 is what we just calculated. So when we sell it, we're going to be using that $10, which we'll use right now. So we sold on December 15th, 15 units. Remember, we don't care about the sale price. So December 15th, we sold 15 units, and the cost would be the average right here, this $10. So 15 times 10 is 150. Okay, what do we have left? We just use this bottom part, we just sold 15 from here. So we don't have 30 units anymore, we only have 15 left. So we do 30 minus the 15 we just sold, $10 each. We're using the average for a total of 150. So it's actually the same thing. It is coincidental here in this problem. So that's really where the major difference is between the three methods. It's right around this point right here. Okay, then on the 21st, 12/21, we bought, 12/21, that's what that's supposed to be. We bought 15 units at $14 each for a total of $210. We're going to add that with what we had before. So we had this 15 units at $10 for a total of $150. Plus this 15 extra units that we just bought at 14 each for a total of $210. Okay, so this is the part where it's different because now we got to do the average of this. So remember, we have to find the total dollar amount, which would be 150 plus 210, so that's 360. And we divide by the number of units, so 15 and 15 is 30. So we want to do 360 divided by 30, should be around 12. So we get $12. So that's my price per unit right there, is $12. Okay, so what do we have left? Well, we have 15 units is what my cost of goods sold is. We sold them, we sold them for 20 each, but it cost us 150. That's our cost. And what do we have left? We have the 30 units right from this line right here at $12 each for a total of $360. And that's what I would be carrying over. So we want to find that number as well. Okay, and those are the four methods. And you can see, even though we bought the same units, we sold the same units, the cost of goods sold and the ending inventory balance changes for each one. So it does make a difference. And even though these are really small numbers, a lot of companies have millions or billions of dollars in their inventory. And these little changes, picking the right method, really makes a big difference for them.